us. I want to start right where Diana left off, and that is with this news that the administration, Janet Yellen and others, the White House, is calling now for companies to disclose what their intrinsic risk to climate change is. Does that make it easier or harder for the people who manage our money in ETFs and mutual funds?
It definitely makes it easier. It's something that fund managers want. I think Secretary Yellen talks about consistent, comparable information. That's something that fund managers want as well.
In other words, it tells the fund manager more about the company's overall risk portfolio. But how the hell would you do that, Eric, if you are the CEO of Chase Manhattan Bank? I don't know how Jamie Dimon would assess the portfolio risk within his company to climate change.
So, look, I think we're all in agreement with the goal. Investors want this information. The fund managers who serve those investors want the information. And I think for companies, obviously, what a bank like JP Morgan would provide as opposed to what an airline like United would provide versus what an oil company like Exxon would provide is going to be very different. But we need to start that conversation now.
You know, Eric, my question, especially as the Biden administration potentially allows people to choose ESG options kind of first and foremost in their 401k accounts, is where's the accountability going to be? You know, it's much easier to compare your performance against the S&P 500 benchmark than it is to say, well, my goals were frankly not, performance related. They were social.
So with accountability, you've got to first have a clear understanding as to what people are saying. So one thing that we've done here at the ICI is come up with terminology, common terminology, so that everyone knows what everyone's saying. So when I say that I'm an exclusionary investor, there's a clear definition as to what that means.
Exclusionary?
But you're absolutely right. This is something that we need to work on.
What does exclusionary mean?
Well, exclusionary investing means that you are specifically choosing not to invest in certain companies or industries. And then you would indicate what those are.
But how do you, so again, and this is a question that I think will overhang the entire ESG movement. How do you then hold, fund managers accountable, especially if they're going to charge fees for ESG funds? If I have nothing to compare their performance against. Now, I guess there could be some kind of S&P 500 ESG benchmark. But in the meantime, especially the younger generation is potentially giving up a lot of performance that they need to compound for decades in order to support these goals. And I wonder if they realize the trade-off that they're making.
Well, I think the trade-off will be clear over time. I think to your question about metrics, when we talk about ESG strategies, some funds specifically say that, look, we're trying to make an impact on social responsibility, for example. So the metric wouldn't be something like the S&P 500. It would be some type of metric measuring social impact. Now, what those metrics are is actually something that we're currently working on. A lot of not only members of the industry, but also a lot of academics have been doing a lot of work in this area. So this is work that needs to happen, definitely. But I am confident that, going forward, we're going to have these metrics and people are going to be able to hold their managers accountable.
This is a fascinating conversation because as you point out, or as many people have pointed out, these ESG funds are really, really popular, particularly with younger investors who want their money to say something, not just to do something. They want their money to make a point, not just percentage points. But let me turn to the question of including ESG-specific funds in 401k plans. As I recall, at the end of the Trump administration, there were some rules or an executive order promulgated, I'm not sure if it was executive order from the White House, that made it a little more difficult for ESG funds to be included in 401ks. What's the Biden position on this, and is it more likely that I, as an investor in my 401k, will be able to effortlessly invest in an ESG fund?
So I think the starting place is investors are the ones who make the choices. They're the ones who get to select which funds they want to put their money into. And so when we talk about ESG investing, it's because the investors are seeking out these opportunities. And to your point about what the last administration did, there's talk about the Biden administration perhaps writing a new rule. They've already indicated that they do not plan to enforce the old rule. So this is something that we're going to be actively working on. But I just want to emphasize again, it is the investors who are asking for the opportunity to invest in ESG funds.
Shepard Smith here. Thanks for watching CNBC on YouTube.